So, hi everybody, this is Also Hub. I'm Giacomo, and today I'm going to analyze one of the stocks that you asked me to analyze, AMD. So, a technology company, specifically in the micro semiconductors business and data centers and so on. So, definitely a very interesting company in a growth market, a pretty good moat, and so on. But yeah, we'll see if there's some value opportunity at this time around in AMD given the current price and the expectations that we have for the company. So let's start off. As a few disclaimers, this is not financial advice, and do your own research. And the data that I've taken comes from Seeking Alpha and the New York University website, the part managed by Aswat Damodaran. Let's get into the content of today. So let's start off with the estimation of the weighted average cost of capital. I've taken the interest rate swap for the next 10 years. The last trading rate more or less is around 4% as of now. So I've taken that as an example. And I've taken the risk premium from the spreadsheets published by Aswat Damodaran. And for the US, this year the risk premium is 4.6% according to him. So then I've taken the beta, the last 24 months beta, that I think could be quite indicative for what to expect going forward in the short run for AMD. So, and here we come up with a cost of equity of around 12.5%. Then we go to the cost of debt. I put it pretty low because it has a pretty low debt to capital ratio, so probably the spread is not that much compared to the risk-free rate. Okay, so next we can see how the capital of AMD is structured. Mainly, most of it is equity, and here's the US tax rate, and here's the estimation of the cost of equity, the cost of capital, given these assumptions over here. And we have it at around 12%. So next we have some financial highlights that we have seen in the last 10 years for AMD, and these are pretty good. AMD has delivered some pretty good growth, even though it's not at the same pace of Nvidia, but still it has done very well. We can see that the revenue has grown on average year over year around 17%. Here's the formula, the CAGR formula that I've used. Here's the earnings growth, and then we see the free cash flow growth. We can see that the free cash flow has grown quite a lot more compared to the earnings, because probably AMD is investing a lot, really a lot in research and development, and so probably reinvesting most of its earnings. But the free cash flow could possibly in the future maybe given out to the shareholders in various ways, either dividends or buybacks and so on. So still good to see that the growth of the free cash flow is steady, and it's not going away. So here we start making assumptions for the coming years. So I made an assumption that for the next around 2.5 years, the company will continue to grow as it did in the last 10 years, so around 40% year over year. And here's how it goes. And then I decrease the growth as the company is expected to consolidate, and the growth in the sector is expected to go a little bit down compared to what it's doing right now. So In order to stay conservative, I've cut it in half, and then I've put the long-term growth at around 3.2% because it's around the expected growth of the US economy, but given the technology sector where it operates, given the strategic importance that these technologies have, especially in the geopolitical situation that we are right now, I think that AMD is really strong, in a strong position, and it will have leverage to make its customers pay more for its products and services. So yeah, that's why I've used these figures over here. Then we come to the estimation of the terminal value, and here's the present value of that terminal value. We sum up the two things, the present value of the free cash flows and the present value of the terminal value. Then we subtract a few things that could dilute our value in the equity of AMD. Here we take the debt, the options outstanding that are given out to the management. I've seen the last time I checked, the weighted average exercise price for these options were around $50 each. I didn't use the Black-Scholes model to simplify this valuation. Probably the value is slightly higher, but not something that could change completely the valuation. Maybe it's a little bit higher, but if the company continues to grow as it's doing, most likely, given that these are American options, can be pretty much exercised once they're vested. They can pretty much be exercised whenever the option holder wants, probably. And it's shown in academic research that these exercises are used way before the expiration date. So probably the fair value of those options are quite closer to the present value, as if, for example, the options were to be exercised today rather than in 5 years, 10 years, and so on. So yes, probably this figure over here is undervaluing the actual fair value of the options, but not by that much, So then we take the restricted stock units and performance stock units and multiply it by the current share price, and we come up with this figure right here that is around $4.5 billion. And we subtract all these things over here. Let me add the debt. Let me add this, and we come up with our estimation of the value of equity. Then we divide it by the outstanding shares, and we find over here what I think is the fair value for the stock. That is slightly below the current share price, that is around 140 as of now. So about 5% less than the current share price. And as a matter of fact, these companies like AMD, Nvidia, and so on have really, really high ratios. So I think that yes, they're expected to grow. Yes, they have a strong moat, but I think that the current valuation doesn't give that much of a chance for value investors and people that are seeking value, that want stocks that are undervalued compared to the expected growth of the free cash flows. So yeah, here we can change some assumptions. We can see what happens if the beta were to go down. As I said, the beta, I use the past beta because it's a good reference, but it's not once you have that beta, it's not sure that it's going to continue on the same path. Many analysts tend to normalize the beta because they think that over the very long run, the beta always tends towards 1. So in the long run, the beta is the same as the index that is referred to. So we can see that it would lower the weighted average cost of capital and so on. We can see what would happen if the weighted average cost of capital would go down. It would increase the value by a lot, but at the same time, yeah, maybe we have to take into consideration what if in the next 2.5 years the company were not to grow as it did in the last 10 years, but slightly less than that. Let's make it like 30%. We can see that the value would still not be there. So if you think that the company can grow just as it did in the last 10 years, yes, it would probably be around just fair value. But if you think that, for example, it were slightly to go a little bit more slowly compared to what it did in the last 10 years, then the value of the stock would probably not be there yet. We can see what would happen if the company were not to grow as it did in the last 10 years, and the effect that it has on the value of the stock. Here's the 105. It has changed quite dramatically. So there are a few assumptions that you have to take into consideration. I think that the value AMD is a great company, that's for sure, but I don't think that there's that big value opportunity in AMD at this time around. Maybe if the company were to go down a bit, maybe we could rethink about it, but personally I don't think there's enough room for growth given these expectations, and there's no margin of safety, not at all, as of now. So this is it for today. I'm Giacomo. Please let me know if you like this analysis. Let me know in the comments which stocks you want me to analyze next. If you would like me to make different assumptions when I make these analysis videos, I read all your comments, so make sure to do that. This is it for today. I'm Giacomo. This is Hustle Hub. See you next time.